G'day, we're on AI today. We are on AI today. And crypto. We're on bubbles, share market bubbles. Not the technology, not the impact on business and global economy, because these things will have a real impact. What we're on, they're having a real impact right now, in fact. But what we're on is the share market valuations, which is going to affect all of us, because when the bubble is pricked, the shares will fall and they make up a lot of value on global share markets in which our superannuation is invested. Now, we used to be a finance reporter, so we've been following bubbles for a long time, since the 1987 bubble, around the time we worked on the share market as a phone clerk on the trading floor when people wore silly jackets and put their hands up and waved them around madly. These days, of course, it's all computer-based, but the gig, the caper is the same. Markets go up and markets go down, and sometimes when it gets really boring, they stay the same. So that's why we gave it away. It is very boring. Spending your whole life wondering whether markets are going to go up or markets are going to go down or stay the same. Michael Pascoe, our intrepid columnist, who was also a finance reporter way back in the day. Pascoe has done a piece on the AI bubble today. Wall Street share market valuations are through the roof, and it will fall, it will crash at some point. And the effect that all this will have on the economy will be enormous. So why does it not stack up, this mega bubble on Wall Street? So it doesn't stack up because the main metric when you value a share market stock or the whole share market is on future earnings. How much is a company going to make in the future? And when you have a look at the S&P 500, the main benchmark index on Wall Street, its PE ratio, or its future earnings bet, is valued at about 28 to 32 times earnings, which means that investors are pricing it right at the moment, the share valuations collectively, at 30 times what they are going to earn in the future. Now, the main stocks we're talking about here are Alphabet, which is Google, Oracle, Microsoft, Amazon, Meta, Broadcom, Nvidia, and Palantir. In this bubble phase of a share market, investors keep rewarding companies because they may put out little announcements saying that increasing their spending, they're planning to increase their spending on AI-related investments. And AI, of course, is having a real impact in the real economy at the moment. We're getting hit by it on YouTube, this very channel, because pointy-headed people out there are flooding the zone with content. The AI slub is competing against real people that live and breathe like yours truly. Now let's have a look at the actual numbers to give you an idea about how inflated this bubble is. Somewhere between, we're quoting from Pascoe here today, somewhere between 3 trillion US and 6 trillion has been invested in building AI infrastructure and software. And that's been responsible for almost all US economic growth over the past year. Yes, that's where the growth's coming from, AI. The top 10 American AI companies, the ones we've named, have provided most of the US stock market's gains over the past 2 years. So we've all benefited because, of course, there's 500 billion of Australian superannuation in the US share market. And also, if the US market goes up, the ASX goes up here as well. So we're all benefiting right now in our superannuation accounts. But the party will come to an end. There is no doubt. Back in the day, we were a bit early on this. You could never pick it to the day. You never get it to the minute. But we were the biggest critic back in the day, when we worked for the Israeli newspaper, Rupert Murdoch's paper, as a columnist. The dot-com boom. We used to rabble those dot-com entrepreneurs heavily, not believing a word they said. And it came to pass that it just crashed and there was billions of dollars of investment wiped out globally. And then we got the next one, the one which led to the GFC. We were 2 or 3 years early on that, saying the share market is way overvalued. Of course, the credit crisis came in 2007, then 2008, the global financial crisis. That was a bubble based on inflated values of Wall Street. Rubbish crap like CDOs, collateralized debt obligations. It was like AI, just people pricing things too high. Now, back to AI bubble. Over the past 2 years, the share market's gains have been valued at 35 trillion, these companies, almost half the total market. They're worth half the total market. Companies that make actual things and provide actual services. Not that these guys don't. Data centres and so on, they are real. That's real infrastructure, but it's just the prices, the valuation is overcooked. Meanwhile, there are 20,000 cryptocurrencies worth $5.8 trillion US, of which Bitcoin itself represents more than half. Now, if somebody hacks that, well, it may be all over in a jiffy, and is it really worth anything anyway? Well, it's worth what people are prepared to pay for it, of course. So it may keep on going because the US dollars, it's a good hedge against the US dollar, as is gold. That's why gold has gone up so much, because people are saying, oh, US dollar, Donald Trump, end of the American empire. And so it's an alternate investment prospect or opportunity. So Bitcoin's more than half of that $6 trillion. $6,000 billion in cryptocurrency valuations. The total cash in the AI and crypto bets is worth more than a quarter of global GDP, global economic value. It's probably the greatest technology investment boom and bubble in history, says Michael Pascoe. You can read Pascoe's assumptions here. It's worth a read because it will crash at some point. The question is, when, of course, because if it all goes short right now, clean up, never have to work again, never have to do this YouTube caper, we all become filthy rich if we knew the exact timing of the crash. So how much revenue to make these share market estimates real will their AI businesses, these companies, need to generate to get a reasonable return on this stock of invested capital, all these trillions? Well, Pascoe quotes a guy called Jared Midak, who is, to be fair, a bit of a bear analyst, takes bearish positions on things, that's his expertise. But Midak says that AI would need revenue of some US almost $1 trillion a year. Revenue of almost $1 trillion a year to achieve a modest 10% return on that invested capital. And those sort of share prices ain't showing 10% assumptions. And that return compares with the hyperscaler's current 25% return on invested capital. The numbers do not stack up. And just quietly, the market went into a bit of a tailspin a few months ago when the Chinese came out, very cheeky, the Chinese, and said, well, actually, we've developed a bit of AI ourselves. You can go on our AI thing. It's called DeepSeek. And we only spent $6 million US, capturing the whole internet and turning it into AI. Because anybody can do it. The internet is everybody's property. So why do these Wall Street stocks say that their valuation should be so high? A lot of it is data centers, which is fair enough. So DeepSeek's gone quiet, but who owns the internet and how fast will it take others to replicate AI? Elon's doing it with Grok on his X platform. We still call it Twitter, just to annoy everybody, because those were the good old days before Elon ruined it. So data centers, that is real, but they're just data centers. The real impact on jobs is real. Right now, newsrooms around the world, they don't need people anymore. We can just AI it, as they're doing, the ABC, News Corp. We could AI, we could have an avatar of yours truly and just automate it, or just have AI YouTube.
Oink, welcome back to the channel. I'm the new co-host, and I demand more snacks immediately.
AI slop is the pejorative term now, the latest one. No doubt there will be many more because a lot of jobs are going to be lost, and AI is going to become a huge villain globally. The legal profession. Why would you need lawyers to slave away on great big tomes, on going through case law, when you can just go bang with a couple of keystrokes and go back 1,000 years at the Westminster legal system, scour every relevant judgment by every judge since the Magna Carta? Why would you need to pay KCs to do that? So companies right now, they can just go to their legal guy and say, you don't need to pay, barristers and Mallisons and Clayton Utes and Ashurst and all these guys. You just do it yourself. Just hit the internet, do it in a city second. Don't need journalists, don't need lawyers, except for litigation. Not for opinions, that's for sure. So it will all blow up. The share market valuations are way out of whack at the moment. If you look at the charts, it will have to correct at some point. So make sure there's some cash in your portfolio. We're not giving advice here. We don't have the Australian, what do they call it? The special Australian license to give financial advice, but it is way overcooked. Take it from this veteran bubble watcher. And thanks to Michael Pascoe. Check out his stuff on michaelwest.com.au, his latest piece. And we thank our sponsors, the silver sponsors for this channel, the West Report, Island Optical and Optical Warehouse for their support, paying journalists to come up with content which we use to put over all the platforms. Please like, share and comment in the section below.